the part where I want to highlight what's happening to the NASDAQ 100 ETF QQQ compared to what it looks like in the dot-com and what it looks like today. Here is the rising channel. This is from the dot-com time, October of 1999. Of course, the climb was significantly higher. From 49, it went to 103. So that was like more than a double in a span of just 5 months. And right around late March, third week of March, it peaked out. But the indication, like a forward-looking indication or understanding that the market was weakening, was the negative divergence in RSI. So that's a leading indicator. RSI was weakening as the market was climbing. That's usually a sign of a market top. The same was happening with PPO. PPO was printing a lower high as the market was climbing. And guess what? At the point when it broke down from the channel, it broke with very heavy volume, indicating large money, smart money exiting the ETF at the point, it just collapsed. From there, it made a quick, so as typically happens when the market, we have a very strong bull market, people don't give up necessarily. So even though it dropped very, like think about from 103 dropping to 75 in the span of the last week of March, that's a pretty big drop. You're talking about close to 26, 27% drop in the QQQ. After that, it had a very steep rally back towards the top of that declining, not in this case declining, but this channel. So the bottom part of the channel, it went and tested that, failed right there. That's typically what happens, that when you break a channel, you come back and test the bottom of the channel once more. And then when it failed, it came right back down to a lower low. And this time, another 25, 30% drop from 92 to 66. And that's how the market kind of bottomed out. Now, interesting enough, another forward-looking indicator that was giving us indication that the market was weakening during the dot-com time was this thing called bullish percent index. This is an idea of NASDAQ 100 as 100 stocks. What percent of those 100 stocks actually are indicating bullish point and figure charts? Point and figure is one way of charting the candlestick. And in here, notice as the market climbed from the October lows, initially it shot up to 93% of the NASDAQ 100 were showing bullish charts in November of 1999. But as the market kept climbing, as we noticed, QQQ kept climbing during this entire time period from November all the way till March, the bullish percent index was actually declining. The peaks from 93 to 83 to 77 were a classic indication of declining tops, is another indication of negative divergence, as in the strength or the strength of the market in terms of strong bullish stocks was coming lower and lower as it's getting higher and higher. And that meant that a few set of stocks, the higher market cap stocks or the leading stocks were moving the market higher, while broader set of NASDAQ 100 stocks were weakening. The similar pattern is actually now panning out, if you notice, in hide the panel. Is panning out in QQQ in today's time frame. So this is now, we are looking at not the 1999 anymore. We are now looking at 2023 and 2024. We know that QQQ bottomed out at 341, and our very recent peak was at 448. Notice if you draw a channel again, the tops being drawn through the upper part of the channel, the bottoms being drawn to a line to the bottom of the channel. We just came close to, in fact, did close below that channel, the bottom part of the channel today. So today we closed near 433. There was heavy volume. There was another heavy volume day just end of last week. So 2 Fridays back to back. Today was also options expiration. You could say, well, often with options expirations, you tend to get heavy volume. So you could say that this could be options expiration related selling. That's a possibility. So we'll have to watch next week with the Fed data, with Jensen Huang's GTC keynote. We'll have to see how does the market overall behave next week. How does it close next week? But overall, this is a concern now. If we are breaking below the channel, similar kind of negative divergence in RSI, with RSI weakening, lower highs in RSI, lower highs in PPO, just like we saw in the dot-com. And not just that, if you look at the bullish percent index, identical negative divergence, as in the highs that it hit was 90% of the NASDAQ 100 stocks were bullish looking at point of figure charts in December. That came down to 82, came down to 72, 68. And now today it came down to 49. It closed below 50. As in more than half of the NASDAQ 100 stocks are not looking bullish anymore. This is actually, call it a leading indicator that only a few top stocks of NASDAQ 100 are holding it higher. Once they start seeing selling, this NASDAQ 100 can start breaking a lot lower. So that's something for us to watch, and something that I'll be watching very carefully. Another thing to keep in mind is if you look at the same bullish percent index, but now on a weekly chart, and I've shared this before, it's also in one of our blogs, whenever the MACD part of the histogram on this goes below the zero line and starts forming a bell-shaped curve from below, the market pulls back. In this case, the market being the NASDAQ 100, the NDX is the NASDAQ 100 index. So every time you have the MACD histogram below the zero line, printing out a kind of a bell-shaped curve, the market pulls back. Bell-shaped curve, market pulls back. Same here, same here. And we started doing that, by the way, another leading indicator, the last few weeks, like from early February, the bullish percent index MACD has gone below zero line. And as we can see that it's getting deeper and deeper into forming that bell shape. So that means that this week we had a big drop in the bullish percent index, and the market has now topped out, as you can see, 448 to 433, and you can see that the dip here is just the beginning. So as you can notice, these dips can continue for a few weeks. Sometimes it could be for a month, 4 to 5 weeks. Sometimes it could be for a couple of months. We'll have to see. If you remember, there was an interesting, and I shared that in the last week's episode, where Larry Williams, a very well-known Wall Street columnist, has put out a blog, and he's talked about the market actually having a pullback. And his blog talked about and it was actually a video. Jim Cramer covered it on his Mad Money as well. He talked about cyclicality. And from his cyclical predictions, the NASDAQ is expected to max out around mid-March, until late May, this pullback could ensue. So that's something the dates don't have to be exact, but that's something that could be something we watch out, looking at the leading indicators of market topping. So with that, another thing to be looking at also is the bullish sentiment. This is among the American investment managers, the NAAIM. This is the exposure to the market. Above 100 means their margin, they are heavily bullish in the market. And every time the previous peaks have come in, typically those have been peaks of the market. So the last peak that we saw in July of 2023, you notice that the bullish exposure of the investment managers went up to 102, 101.8. And recently in December, that had gone up to 102. We did see a pullback, but then over the last couple of months, it has come back to a higher high, above the 101, above the 102. This week, it printed 104.7. So that indicates that bullish sentiment in the market is reaching an extreme. And typically, that pullback would also be aligned with a market pullback. Another concern, another thing to watch in the next several weeks. So now I'm going to take kind of a pivot out of the American market